Good morning, traders. Welcome investors to Pre-Market Prep, the morning show to get you guys started. Let's go ahead, dive into today's topics. We're going to get into, of course, the Fed Outlook FOMC meeting today. We'll watch, of course, some earnings that hit. Google, we'll talk Microsoft, Boeing, Shopify, Chipotle. We got a lot to talk about. We also got our special guest, Raghee Horner, Managing Director of Future Simpler Trading. Guys, smash the thumbs on up and welcome to Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's go ahead. Let's bring on the guys, Joel Elconin, Dennis Dick, and of course, the Joel Elconin charts.
Oh, man. Whew. Well, we'll just give you the bottom line here. We're up 30 3/4 handles at 39.54. We were strong after hours, snuck our head over Tuesday's high, and now just peeling back a bit. Crude, that's up 90 cents at 95.89. Gold, well, it's in the green. We'll see how long that lasts. Up 70 cents at 1736.40. Got some lower highs to clear. Silver, that's up 14.5 cents at 1868. Bitcoin on the rebound. That's up $310 at 21,225. And Ethereum, it's going the same way, up 6.5%, up $89 at 1,454. So I'm going to bring in Triple D Trader, and I'm going to ask a question. So all these years that I've been following and learning about the markets, I thought when a company misses earnings, for the most part, you should sell them and go down. Did I miss something in all my years of trading and investing, Dennis? Is there something I'm missing today?
This is the miss rally day, and we talked about this potential. The only way this earnings season was going to go okay was if they started buying companies on bad earnings. I just didn't think that they turn around and just start ripping them on bad earnings right away. I mean, we saw with Micron 3.5 weeks ago. We saw it with Wells Fargo. It was trading down pre-market on a miss, and then it just started rallying. So we've slowly seen them starting to come. Obviously not on the smaller stocks, but on the bigger names, we've seen that buy the dip mentality come in even on misses. And Mitch here, we've got a couple of misses, obviously, from two of the big dogs. The biggest ones reporting,
biggest dogs,
but the stocks are higher. Mitch, how did Google and Microsoft do?
Let's go ahead. Let's dive on in. First one I got is Microsoft. We'll talk a little bit about this. Dennis, if you can do me a favor, check your mic settings. I think it's on the computer mic or some other mic than the headset. Just check
I might have to come back
really quickly.
And switch that.
All right, let's dive into Microsoft's earnings here. EPS missing and sales missing. EPS missing here, $2.23. Estimate was at $2.30. Sales were at $51.9 billion, $51.9 billion, missing the $52.47 billion estimate. Intelligent Cloud segment revenue was at $20.9 billion, up 20% year over year. Xbox revenue was down 6% year over year. Microsoft confirmed it's still on track to expect double-digit growth in sales and operating income in fiscal 2023, with margins roughly flat. This is what started getting Microsoft pushing towards the upside. This was during the earnings call. And I did get a kind of a note here that was mentioned from Wedbush Analyst. You guys know him. You guys might know him. Dan Ives. He said that Street was hoping for a whisper of 40% Azure growth in September quarter, and Microsoft gave 43% with positive comments on demand.
Check 1 2, check 1 2.
Much better.
I think I just switched mics.
Wholly
Yes,
different.
Microsoft was down ahead of the conference call. So they did this last, I feel like, Mitch, did they do this last quarter?
Yes.
Where they were down on the numbers, or was one way on the numbers, and then they had the conference call and the stock went the other way. I can't remember. Maybe it was that was up and then the conference call happened and then it went down.
No, it was same thing.
It was the same thing?
Yep.
And props, we diss Jim Cramer sometimes, we give him credit sometimes. Last night he tweeted out, and I'm telling you, man, that was a good tweet. When the stock was trading down about $4, Microsoft, he tweeted out, he says, I think Microsoft and GOOG are both going to be okay tomorrow, meaning he thought that they were going to go higher. Not even 5 minutes later, the conference call starts, Microsoft, and they obviously said the stuff just Mitch said, and the stock started ripping. So, Jim Cramer, good call last night on that. Unbelievably, the miss rally here. And then maybe we should just tie Google into the same report here, Mitch, because they kind of are doing the same thing. The GOOG headline numbers were not good either. But it's like expectations are so low, stock near a 52-week low, that if you just say anything okay, the stocks rally. So what was the deal with Google? How'd they do?
All right, Alphabet here coming in with a Q2 EPS of $1.21, missing the $1.31 estimate. Sales were at $69.98 billion, missing the $70.35 billion estimate. Alphabet CFO says foreign exchange impact could be greater in the current quarter. Confirmed Q2 double-digit revenue growth. YouTube segment revenue was at $7.34 billion, up 4.8% year over year. Google Network revenue was at $8.26 billion, up 8.7% year over year. Google Cloud revenue, $6.28 billion in the second quarter, up 35.6% year over year. And I think that was the one that kind of got this turned around a little bit when you looked into the cloud revenue, which is a lot of the focus also for Microsoft, right, with Azure. Well, here you guys see 35.6% up year over year. That might help out.
I'm long both. I'm long Google. I'm not long Microsoft. I'm long this stock in my long-term account. I don't know what to say here. I mean, this is what we needed to happen. We talked about this earnings season and saying, hey, the earnings we knew were not going to be that great. What we needed to see was if the stocks get hit on their bad earnings, that they'd actually turn around and start to buy them. But what I didn't anticipate was that they would actually just start buying them right off the hop on the bad earnings. So, I mean, this is incredible reaction. It makes you start to think like, yesterday I'm nervous about these reports. I hedged my Apple position. I'm looking, I'm like, man, if they're going to start buying these stocks on bad reports, I mean, and obviously it's not all stocks because we saw Snap and we were going to talk Shopify here this morning too, which is trading down. But I'd say so far so good here for the people who believe the bottom's in place.
Bottom?
I don't know.
Is there what's your thoughts, Mitch? What's your thoughts overall here?
I think this is setting up as good as a bull trap as there can be. There's going to be some optimism out there.
Well, you know what? You could be right too. I mean, here we are. They're like, okay, you just got to buy stocks no matter what, because even if they're bad, they're good.
But
and then maybe they pull the rug out from under us.
One thing that is happening here, and you can see that on the SPY, is that we're hanging out at the top of the range. We haven't just washed down back to the bottom of the range. You can see that on the daily, and so we could just hang out here. There's no reason why we can't close.
We got a Fed meeting today too. We got a Fed meeting.
Exactly. There's a lot there's a lot that can swing. Let's just put it this way.
If this was any other chart or any other company, like take the GOOG off there, okay? You would look at this and you would be like palms out. Like they missed. Is a company with this kind of chart going to turn around on an earnings miss? I mean, okay, go ahead. Show me this. This is a horrible looking chart. It's a horrible looking on the dailies. It's a horrible looking on the monthlies. Okay. And you're getting a pop up
report, to be honest.
What?
Even the fundamental numbers is a horrble looking report too.
So go ahead and buy it. Now, I don't have as good technical setup in Google as I do Microsoft here, but I will say you snuck over 111, that euphoria off the number, and now you backed off. I'll see what happens at your 2-day high at 110.58. I see someone looking for 115 today. I'll say let's get through 113.18 first. So that there's my technical setups. You don't want to see it go red. And right now, it doesn't look like it's going to go red. But if it goes red, it's dead. I mean, it's taken out the low of the move. The Fed might have something to do with that. The much better technical setup here is with Microsoft. And you got a roadblock here. Yeah, okay, yeah, we almost went to 270, at the after hours. I don't know who almost bought that up to 270, but what happens at 265 now? That's still over $5.50 away. That was a triple top. I don't even think we get there today in the regular
I don't think
session.
so either. I think you could say the high and the low is probably in if you consider the pre-market after hours action there. It just got stupid, Mitch, last night. I'm watching the trading, and I'm like, they started ripping that thing. They were ripping Microsoft so hard that the Qs couldn't keep up, and then they started hammering the ETF effects, right? After as they started hammering non-tech QQQ components or the lower beta tech components. Like, for example, Starbucks last night started getting hammered on the Microsoft report because the Qs weren't keeping up. So the Qs don't keep up. It all has to add up. So they knocked Starbucks down like 60, 70 cents last night on the Microsoft numbers. They knocked Cisco down $1.50 last night. Now, Juniper was reported, so a little bit of that could have been with that. But they knocked Cisco down $1.50 on the Microsoft rally. They knocked Intel down because it couldn't keep up. They were like grabbing whatever lower beta QQQ names to make the math add up last night. There was literally like WBA, which is a QQQ component. I saw Marriott get offered. Activision Blizzard, which obviously with Microsoft trading higher, you'd think it should trade higher, but they were knocking that down last night too. It was very, such a violent rally that the ETF effects had actually knocked down the other stocks. And people won't believe that. But you could see it, like when I have the scanner going, you can clearly see it's an algo because they offer them all at the same time. All these stocks just come in, boom, they're all offered. And then it pulls out, and then boom, they're all offered again. You can see the algo that's trading the basically the lower beta and the non-tech components of the QQQ. I've talked about those ETF effects before, and obviously we're not going to get into 8:15 in the morning and explaining all that in detail, but for the most part, it all has to add up. What's that?
I'll need another coffee for that.
Oh yeah, you'll need another coffee if I get into the details on that. But that's just showing you how violent the Microsoft rally was last night. And then it started to come off, and then they actually started to buy the Starbucks and the Cisco and the Intel and the Activision Blizzard back. But it was a violent rally coming off here now, and that was just a vicious short squeeze because people probably short that last night on those numbers. Then the conference call comes out, and they get the butt kicked.
Yeah, the question I think we'll all be asking, is it?
It's a trap! It's a trap!
Is it a trap or not? We'll have
Joel
to keep watch.
Arnold.
It's not Arnold.
I knew that was going to happen.
Return of the Jedi, Admiral. Isn't it? How do you say his name?
I'm not going to go there, Dennis. You can
Arnold, Star Wars.
When the Death Star.
Dennis, are you a Marvel? Did you go see Thor? Did you go see Thor? Because Dana was going to go see that. Thor.
Oh, that I caught a little bit of that, Joel. You don't want to go see that. That was horrible, man.
Admiral Akbar.
I tried a little bit of that Stranger Things things, and it's appropriately named.
It's strange.
But that so there's your setups. I mean,
it's all about the cloud, though, right? I mean, that's what I think. You just keep watching the cloud, at least for Microsoft and Google, and I think that's what you're kind of focusing on. If you saw the comment there from Wedbush analyst Dan Ives, he's also saying the same thing. Everybody was watching the Zuri growth for Microsoft, and then you see it here with Google Cloud revenue, and I think that's the focus for these business. What's going to drive them forward is going to be cloud businesses, right? It's not going to be like the infrastructure anymore. It's more what can they do online and kind of improve their margins there. Another thing stated, Google confirmed that double-digit revenue growth. And so at least the outlook going forward still looks good for these companies. I will state that. I know that I'm sounding a little bearish, but at the same time, at least these two companies, they missed, but their businesses don't seem to worry like we got in what? Well, let's go quickly to the Shopify. It's completely a different story, right? this is how quickly stories can change. Let's talk about Shopify here and what they got in their earnings. Let me scroll down here. Let me pull them up here. Adjusted EPS here at a loss of 3 cents, missing the 3-cent estimate. Sales at 1.29 billion, missing the 1.71 billion estimate. Shopify says now it expects 2022 will end up different. More of a transition year in which e-commerce has largely reset to the pre-COVID trend line and is now pressured by persistent high inflation.
I mean, it's taking out the lows, at least in the pre-market. What I will say is it needs to get back up and hold this whole $30 level. And you know what? We're in this buy the dip mentality here. So I'm not going to short it and saying, okay, this is going to pull the Snapchat, because this is the kind of day that you get the miss, and, you know, who knows? It could rally. You're still kind of at support. So it's not like it's trading 27 and it's straight through it. It's right there. So we could get back up there over 30. You'd still be holding that support level. I would say that's the critical level, but it's got to do it, and it's got to do it in a hurry. It needs to get up there at 930, hold the $30. We'll probably flush out the stops. I mean, there's no sense coming this far and not hit a few stops. Maybe it takes her down to 29, but get back up over 30, and then you'd have the old Gil Morales undercut and rally trick. So there's the potential for that to set up. But, you know, if you're just buying at 29 and it doesn't get back up over 30, then it just might be an undercut and a continued undercut. So, you know, and you never play the undercut and rally until you actually get the rally.
Someone's making a stand at 29. They just want to bring in everything they can at 29 after we just traded over 40 just a couple days ago. I'm just gonna go fundamentals here, and the management of this company scares me. I would just, the things that are coming out of their mouth, what happened yesterday, you know, and then they come out and do this today. I have zero faith in the management. And so when you have zero faith in the management, you get this kind of price action. I'm hands off. I'm not buying this at 29. I'm not buying it at 28. I'm not buying it at 25. I'm not buying it at 20. There's absolutely, until there's some kind of regime change, we're not going to have another pandemic. This was it had its day. The management.
It's the valuation. It's not even
still
management.
what's the valuation on it?
It's too expensive. The stock is just too expensive. And the question is, like, I mean, it's not like it's GOOG, Microsoft. It's a smaller name. It's widely owned just because it had such a big name, but it's still a smaller name in the big picture. If you've looked at Snapchat earnings, it's been the gap and the gap down and continued to go down. Upstart was the same thing. Gap down, their report tried to rally for a few days and is now making new lows as well. So there's going to be, it's not like they're going to come in and buy everything. But with that being said, I'm cautious today because, you know, we go in the next report, which we'll talk in a second. We're seeing another miss rally. So I'm cautious selling short anything in the hole today. Maybe it's just a today event.
My big question is, will this kind of play, is this giving us a little forward look to Amazon? And will they kind of mention more how it's been a reset for the pre-COVID trend line, like was stated here by Shopify? That would be my concern there if they see a slowdown also.
Bring up the Amazon chart to your point, Mitch. It was trading higher, a little bit higher than it is now. And then Shopify reported, and it did get hit a little bit on that Shopify. You can see the pink bar when Shopify reported there. And obviously, we're up over 118 this morning. So we have come off on this Shopify report. I mean, Amazon's, from
way
the
bigger,
big picture. Yeah. Like Shopify will definitely be impacted by Amazon. How much Amazon's impacted by Shopify is probably not nearly as much, but Amazon is due to report. So some people will be like, okay, well, Shopify, is saying this stuff. Maybe we should be cautious with the Amazon. It got hit about $1 on the Shopify report.
Big difference between Amazon and Shopify.
For sure.
But much more diversified company with the cloud services and everything. So I wouldn't, I would favor the Amazon over the Shopify just based on that. Amazon got hit yesterday. Walmart, everything got hit yesterday on Walmart. How quickly we forget about Walmart? You know that? Like, okay, it's gone. Whatever.
Yeah, the market's trying to forget about it right away.
Yeah, Yeah, look at that today. And today
We held the lows in Walmart too, though. We're going off
I
script a
know.
little bit here. We held the lows in Walmart, 117, 118. We kissed on 120 and we bounced. And a lot of the other plays, the sympathy plays, bounced to
moved.
Target,
Yep.
Costco. They came in. I mean, they were down more than they were in the pre-market. Target was, I think, trading like 147 or 148, 151. So you did see a little bit of the buy the dip mentality come in there too. And this is what's happened. It's a little bit of a different market right now. It's a little bit of a different feel. There's FOMO showing up in buy the dip mentality here. So whether that continues or not is still to be determined. We got the Fed going to talk, obviously, but I would just say you can see that there is some FOMO out there, and some people think the bottom is in. I kind of am one of them, but at the same time, I'm cautious.
Let's go to another miss and a miss, and the stock is up. Wouldn't you know it? Boeing here. Let's go to Boeing. Boeing here, the core EPS at a loss of 37 cents, missing the loss expectation of 16 cents. And the sales were at 16.68 billion, missing the 17.55 billion estimate. Boeing did report positive operating cash flow, and it's actually up today. What do you guys feel about Boeing now?
This didn't even hesitate. I mean, on the initial numbers, it's like the algos are
Never
like
even
all
went
over,
red.
like, we got to miss, we better buy it. It's like they've been reprogrammed here because this thing never even looked down. I mean, you get the headline numbers coming out, you're like thinking the news algo at least will be wrong on this one, but the news algo being smart about it, miss, and they just started buying and they haven't looked back.
Let's see. I mean, I think there's one stock that I
Your
probably
internet
give.
connection, I think, is a little bit choppy, Joel.
Yeah, it's
Just all of a
choppy
sudden.
today a little bit.
Yeah, it just started. So
Really?
what is it, Comcast?
Yeah.
You let me know if it's
you guys
Rogers.
make fun of my Rogers.
You let me
Now
know.
making
I'm
fun
ready
of
to
your
short that thing.
We short Comcast, and Rogers reported today too, but Comcast and Rogers. Okay.
Didn't they fire their strategy guy?
I think so, yeah. The
They
Rogers
fired somebody. Somebody
I
got
keep getting
fired.
apology letters from them. They send an apology letter like every other day.
Yeah,
Apparently,
did you
they're
tell them
supposed to
to
give us like
apologize
5
to the
days of
portfolio?
credit on our next bill. That makes up for my one lost trading day, I'm sure.
Well, you got room, I guess, to a gap fill here. First things first, let's take out that pre-market high 63.88, and if that's that's almost $4 away. So make sure you take out that pre-market high. If that's not good enough for you, you got a gap fill at 166.85. Top of yesterday's range. If you're looking now, that's a way. Oh, you could get there. 158.18 was the top of yesterday's range. I don't frankly understand this stock. I mean, the airlines are not doing it good. They double the EPS loss. They miss on revenues. I don't think people are buying bigger planes. I don't even have pilots to get the planes in the air. So been wrong on this one. Not been in it. Staying away from it. Definitely not buying it up $4.50 at 160.
It's hard to chase stocks on bad earnings.
I know.
It's one thing like, oh, this is a good earnings report. Oh, this could actually, surprise. But most of these earnings are not good. I'm like, I don't have a playbook for this. 22 years, I don't have a playbook for them buying stock. I have the playbook for them coming in after the fact and buying the gap down on bad earnings. I don't have the playbook for them buying the stocks initially on the good earnings. This is like a new one here. Like, boom, algo, miss, algo, buy. Like, holy, this is a new playbook.
If this market holds up today, with the remainder of the shirt looks good now, right? We're up 35 handles. If this market holds up today, holds up through the Fed meeting, then I'm going to track down every analyst that's calling for new all-time highs by the end of the year, and we're just going to have them. We're going to have them on every day. That's what we're going to do.
They could actually end up being right here. Craig Johnson could be right again.
Yeah.
If this happened, I don't think there's any way, no how, but you never say never.
To me, a day like this.
Wait, but still, the Mitch rug pull is a serious concern here as well. Mitch is saying this is the bull trap of bull traps.
I actually think we could be green today and then get the rug pull. So just be careful.
Wait till the Fed
maybe we go back up and test 4,000 again.
Yeah.
That's what I think. I think we go up there and test, because what happens there? It questions the bulls and the bears there if it comes back, because some bulls got really weak-handed on that first down move, and they probably sold out. So I think it tests. I always think that the market likes to pressure both sides a lot of the times when it's going to do a swing, either bullish swing or bearish swing. It's going to test the bulls and the bears. In my eyes, we tested the bulls again, and we pressured the bears because everybody's going to get pressured on the shorts once we get back up to that 400.
It's a great point too here, because you got both sides. You got a very mixed market right now. Some people think the bottom's in, some people think we're going a hell of a lot lower. So just shake out everyone, chop them all up, shake them all out. I mean, so that's why fading the moves is still working on both sides. Why the buy the dip is working, sell the rip is also working. Chasing has not been working. So I'm not chasing and selling short the stocks that are gapping down. I'm not buying the stocks gapping up. I'm going to stick with the fade trade. The fade trade continues to work in 2022. And even with this happening, the fade trade is probably still your best play. I don't know if I'm coming necessarily in short Microsoft, but just fading overall market moves has been working nonstop in 2022.
Yeah, it's a tough market out there. Let's go ahead. Let's continue going to some earnings. Let's go to a beat. What? I said it, right?
Oh, it's probably down.
A real beat?
I'm sure it's down. What's that?
All right, we're going to ENPH, Enphase Energy here. They actually beat. Take a look at that, guys. Q2 EPS here, $1.07, beating the 84-cent estimate. Sales at 530.2 million, beating the 504.5 million estimate. Enphase now sees Q3 revenue at 590 million to 630 million on the high side. The estimate was 548 million, so raising that off the bottom line, almost over 40 mil there. Needham maintained a buy on Enphase and raised price target to 275. This was one that was on my radar. I thought it was setting up there on the daily, and look at Enphase go.
We've been talking about the solar stocks, and they're the stocks that are sitting up there not too far from the highs. And especially
it's cyclical.
A couple of
it's actually cyclical and seasonal during this time to see solar stocks run. I've mentioned that before. I've talked about it with SPWR, SunPower. And so I'm going to be watching these solar names now.
And if you want the pairs trade, so ENPH, SEDG is the one that I pair up with ENPH. They're the two big guns. It used to be First Solar.
I didn't know that
not
one, so
anymore. It's the two leaders in this industry right now are ENPH and SEDG. Could First Solar get back on the map? It could. You're going to see all the solar stocks rise this morning. TAN is trading up 3.28%. This is actually a beat on good numbers here too, so which is different from what we were just talking about.
Yeah.
So, and these stocks actually have been trying to perform, especially ENPH. I mean, what are we? We're you talk about this bear market we're in. Not really for ENPH. It's 282, so we're still $40 off the all-time high, but we have come significantly off the lows. Again, this stock, surprisingly, Joel, ENPH bottomed in January. So, I mean, where everything else bottomed in May or June, this one hit its lows back in January at 113, and we've quietly doubled since then. So we had the bear market in Enphase and these solar stocks a little bit earlier.
Dennis, it's pretty wide in that right now, right? It's
always somewhat wide, but
tell me what it is.
That's actually not bad. 50 cents wide, 238.52 to 239. You can get out of this.
Okay.
500 shares up, 5 up.
Okay.
4 or 5 now.
There's a relentless bidder in here, okay, and he's been starting since the number came out, and 235. I'm just looking at that right now. I know that's $3.50 away. I don't know if it's one person, it's short, or 2 people, or 3 people, but this thing has just got a relentless bid. If it turns, I mean, I think this thing could drop $10-12 in a heartbeat, but I'm gonna go with the trend.
There's going to be a lot of error in this too, but it is on good earnings. It is justified. When you come in, you see this up 10%, you see that earnings report, you're like, okay, I get it. Some of these other stocks that are trading up 5-6% on bad reports, I'm like, I don't get it. So that makes me a little more cautious to fade a name like this, but it's a thinner issue. 118,000 shares have already traded though, so it is trading.
That's a decent amount.
I wonder if there was a big block or something in there, because I haven't seen that kind of stock going by. I wonder if there was a block, block or something. But it's a lot of like 25 shares.
240, just over the pre-market high. If 240 was your target, 240.99 was your pre-market high. So I think, I would just look at 240. If you love this thing and you think this is just like the greatest report and this thing, you want to see it go 240 off the bid, off the open. You want to see it just chop through 245 and then make a run at 250. So if you want an ultimate target today, I will give you the monthly high at 255.09. And the only reason I'm just thinking is watch out for the fives, because the first time it went up to 235, it stopped. And then it went up to 240 and it's kind of paused. So someone's willing to sell a chunk every $5. So that's what I'd be looking at in this one. Great move. Congratulations if you own it. If you have targets in the 240s, take a good hard look at them.
Yeah, I like that relationship that Dennis was mentioning. One that I'll be watching just because it had a good week, like 2 weeks ago, is JKS, Jinko Solar. So that's going to be on my radar towards the bell, especially with a good report.
What's wrong
in
with
EMPH?
TAN?
I never trade that one. That I don't know what it is.
What's in it?
I've lost so much on TAN.
We're going under the hood.
Yeah, go under the hood here.
You got EMPH, SEDG, you got First Solar, you got Run.
Where are you getting that from, Mitch?
Well,
I got the Pro.
No, I got TC2000, bro.
Oh, the TC2000.
Look, I'll show you.
Break it up. Does it have the percentages?
So no, it doesn't have the percentages. That's the only thing it doesn't have. But it does have the active tickers that are in there. So you got EMPH, SEDG.
Yeah,
First Solar.
That's 20%. Those two stocks are 20% of it.
Yeah, Run, AY, DQ. You got AKS. You got
that's what I'm thinking.
SunPower, Array is one of those dogs. Oh man,
SunPower is one of those dogs.
I've lost on that one too. You got some smaller names too, like Sol, Renasol. That one's been kind of not moving at all. Just going sideways while the rest of these are coming back up. So one that I'll be watching also is SunPower.
Valuation is an issue here still. I mean, MPH is not a cheap stock. So it was a cheap stock at one time. If you go back to where it was trading, when I think, who was the activist that dissed this thing at $60 or something like that? There was somebody that was coming in that were one of those short reports. Remember 2021? Do you remember it, Joel? Maybe it's 2020 even.
Oh, it was SEDG.
Oh, that was SEDG they did.
Yeah.
Okay.
Yep.
Yeah, and that came down. That was a buying opportunity there too.
Oh yeah, yep. And that was
clean energy.
Clean energy, right? If you're looking at a play for long term, right? I mean, this is the thought out there, and you keep hearing more and more mentions how we want to go away from, reliance, fossil fuels. I mean, this is something to keep in mind as an investment. Of course, there's trading moments on these stocks. They love to trend, but they also trend down too when they turn around. So just be careful out there. Usually if I see technology down big, I look at the industries and I'll see solar usually on polar opposites. Either it's up big or down big. So just be careful out there.
Solar opposites or polar opposites?
I like that. I see what you did there, Joel. All right, let's talk one. Actually, it's 8:35. We'll save some PayPal and Kathy talk for after. Let's dive into our interview today. Let's take off Enphase. Let's bring on Raghee Horner, Managing Director of Futures at Simpler Trading. I know the chat's going to go wild, so let's go ahead and welcome Raghee on.
Hey, how are you all doing? Good morning. Great to see you.
Good morning. Great to have you on again.
Yeah. We kind of just been scratching our heads this morning on the earnings misses before we go into the dollar and the Fed and stuff. And this could turn out to be like the most bullish day in the history of the world, right? Microsoft and Google missed, the two big dogs, two of the top three components in the index, and they miss, and everything's okay. Are we in la la land here, or what's your take? It's interesting to follow the fundamentals, but sometimes they don't always tell the whole story.
Yeah, fundamentals, fundamentals. I don't mock the interest in earnings, but when we look at the economy, I've always looked at there's one pillar, there's one voice, and until I get the S&P target from Jerome Powell, everything is, what are they going to do next? And when you take a look and measure what they're going to do next, it looks more and more like we're coming off that 3.5 to 3.75% target rate probability come November, December. We're coming down to 3 to 3.25, or 3.25 to 3.5. So we're expecting at least 1/4 point less a hike. So as much as we're still in a tightening cycle, we're more than halfway there, and expectations for the continuation of hikes, say it to 1 point at 4%, those are gone. Those Fed fund rates are really telling us that the Federal Reserve could be done by November, December at 1/4 point less.
So that would explain, like the move in the TLT. And I mean, are you a believer? I mean, I guess we'll get it with the we got CPI data coming out in the middle of next month. I mean, I was saying this ahead of the last print. I mean, I'm just looking at these commodities, and if you just put on you're in focus. I mean, your commodities have come in, right? Your corn has come in. Yeah, natural gas got a little pop. So the Fed's doing their job. Everyone that's blaming Powell and his policies and stuff, it kind of looks like it's actually working.
I agree with you, my friend. When I take a look at commodities, or I take a look at agribusiness like the MOO ETF, definitely the worst seems to be behind us. I just remember one thing that one of my mentors told me when I was a very young trader: optimists make money. It's easy to be a pessimist. It sounds kind of cool to always be down on the market and sort of a perma bear, but optimists make money. So I'm not being Pollyanna, and I'm not trying to tell your listeners, because they're far more educated than the average bear, clearly. So I'm not trying to tell everybody, hey, it's just time to blindly buy. But let's measure where, for example, M2 money supply is. Everything I try to do is going to be based on some sort of rate of change of data. Otherwise, we sit around and anecdotally point out to things that we've observed without any real way to track it. M2 money supply has a cause and effect to CPI. So as we print less, I mean, that's all this techno babble in trading. M2 money supply, it's dropping. CPI will follow suit. The Federal Reserve knows this, right? This data comes right from the Bureau of Labor Statistics. It comes right from the grand poobahs, the Federal Reserve themselves. So we're definitely looking at PCE having peaked. CPI was sort of not ready to peak, but it is now. And then with M2 heading lower, that cause and effect is set. And if the Federal Reserve still sees that inflation is their arch nemesis, that's starting to recede. And that's where, and by the way, I'm never talking about the world of the real. When we're talking about the markets, we're talking about this little, who needs the metaverse? We have the markets. They exist in their own little bubble of reality. So when people say, Rog, my grocery bill, my gas bill, I agree. But we're talking about the Fed's reality, and we're talking about macroeconomic reality, which might as well be on Pluto, the way that it feels. But that is what we have to track.
I mean, that's a great point. And sometimes the markets and the real economy are just disconnected. I mean, maybe more often than we'd like to think. I mean, we like to think that the markets are looking ahead 6 months all the time and the markets know everything. But the market is made up of information. And some of that information is still just a guess. So, I mean, I've always been of the opinion that the markets are not efficient, that, there is opportunity to extract alpha because the markets are not efficient. And I mean, maybe the markets aren't as smart as we think they are.
Preach. They're as smart as we are. I love what you just said. I hope everyone, gosh, when you're watching this on replay, rewind that and listen to that 9 times. They're only as smart as we are. I love that. Love what you said there.
So what do we do here now? I mean, we're in this situation where everybody was, is saying, and they're still seeing on CNBC, recession is coming. You're not going to be able to navigate a soft landing. There's a lot of bears out there. There's some people that are starting to turn bullish, but we've had a significant rally off the lows. What do we do here now? How's Raghee Horner coming in and playing this market at this moment in time?
Sure. I'm going to talk in time frames, because time frames dictate our time horizon. So if I'm looking at the daily, we were heading lower, let's say on the S&P. We're starting to embrace a whole lot more chop throughout 2022. So yes, we're still heading lower, but it's choppy lower. And it seems that we're looking at perhaps, if I'm looking at the 17th of June, whatever that low was, around 3640 or whatever that area, on the September contract, if that's going to be the worst of it, I'm not saying we cannot hit a slightly lower low, but if that's going to be the worst of it, if we're not going to reorganize into a downtrend, which as long as those target rate probabilities show we have a certainty around where the Federal Reserve is going to take us, I don't believe earnings are anything more than a trading event. I don't ever see that a good or bad earnings season has changed the trajectory of the broader markets on a daily or even a weekly time frame. On the weekly time frame, which would map to more of my position trading or longer term portfolio, we're still above the 200 moving average, the exponential moving average. We're still weak but choppy in a lot of those weekly charts, say XLK. So if I can find those weekly timeframes that are still north of the equator, that 200 EMA, I can't say this market is tripping down into, I know bearish territory can be more of a percentage conversation. For me, it's a really simple one. Am I above or below that 200? And it's uncanny how well that usually works. Now, granted, the dailies are still below the 200 in most cases. But again, I think the lower lows are done. And I don't say I think. Who cares what I think and who cares what I feel? The data seems to map to the worst of it being over. And as far as recession, frankly, that's something that happens on television. That's something that economists are going to get paraded across financial television to do. And we're watching Benzinga, not TV, for a really good reason. We don't want talking points and panic and hyperbole. We want actual ideas that keep us opportunistic and optimistic. And that's what I love with what you all are doing. So as far as I'm concerned, the worst of it's over. Let them talk about recession. I've never given a rip about recession. It doesn't change what I do. I hope that makes sense.
It does. It does. We're on the line with Raghee Horner. She's the managing director at Futures at Simpler Trading, giving us her insights on the market. The other thing that I found is a positive in the market is the vol's coming down. The average daily ranges are coming down. And when we had the wicked declines that we had in May and June, I wasn't like trying to pick a bottom. I just wanted the market to calm down. And now I just when I looked for targets today, after being up over 100 handles, 120 handles, we're down to 73.5 now, and we're not. And maybe we'll get there today. But you talk about the choppiness. I mean, even this intraday stuff. I mean, yeah, like yesterday was a good day, to play some shorts. But there was plenty like 10 and 15 handle rallies that, you're like, okay, I'm just going to hold this to the close. We're going to low print. So talk about the volatility come down. And do you think that that's going to continue? Because I think that's a positive for the market.
That's a great observation. And you know that most traders look at price and price only. Maybe they're looking at the factor of time. Maybe they're adding in volume at a price-based level. And then volatility ends up being something that nobody even acknowledges other than when the markets explode. And you're right. I completely agree. When we have volatility to the downside or to the upside, there's a panic. There is we discounted this environment incorrectly. So there's that very violent adjustment to the new reality. Seeing things get quiet, I think could be two things. One, it's summer. Two, we're going into the FOMC. And, I think it's a combination of we acknowledge and accept what it seems a path to the rate hikes are. And there's just not as much to be freaking out about. Microsoft missing or Google missing or those kinds of things. I think we were already pretty pessimistic. So the fact that maybe they didn't miss as bad, and they missed the whisper numbers by quite a bit. They did not miss Wall Street numbers by quite as much. So we were already sort of calibrated to sort of the worst. And I always come back to trading is more sociology and psychology. It's less economics. I don't care about recessions. I want to think more about like what you're measuring, understanding volatility, because that's, definitely what's going on in terms of people finally calming down. And I think starting to look to the upside of we've got the worst behind us.
All right. Now, it was mentioned in the chat, and I'll kind of piggyback off of that. The question was, do you see any correlation with the Qs and Bitcoin? And if you're kind of optimistic about the outlook in the overall market, are you starting to get optimistic about the Bitcoin?
Bitcoin. When I first got into Bitcoin, the idea was it's a bet against central banks. And I still believe that to be true. The more that we see irresponsible printing, we see irresponsible prolonged periods of time at very low rates. Bitcoin was a bet against central bankers. And I still approach Bitcoin in terms of as a trader and investor in that regard. Are central banks going to get irresponsible again? If you play out the Fed fund futures to July of next year, just 12 months from now, there is a very slight, I do mean very slight, but there's a slight expectation for rates to come back down.
Oh, I think so, Raghee. I always want to, I'd like to interrupt you there too, and then we'll continue on the correlation. But I completely, I think that's a possibility, a distinct possibility. I think the Fed's overall plan is to lower rates, get inflation to come into reasonable number, or to raise rates, get inflation to come in reasonable numbers, and then start cutting the rates because they know they can't keep the rates up this long. The world is built on debt. The world is literally built on, it's not like people are, owning their houses anymore. There's, a lot of mortgages. There's a lot of pain to come. If rates stay up for the foreseeable future, continue to climb from here, there's going to be a lot of problems in the real economy. And I think the Fed knows that too. So I think the Fed's overall plan, let's get them up really quickly, which is why they're jacking them really quickly. Let's attack inflation, get it down, and then we can bring them back down just as quickly. I think that's the overall plan.
They have to, and there's a book. It's a little dry, but it's good. It's called The Holy Grail of Macroeconomics, and it studies the Japan economy and the central bank policy that got them to where they are. Let's face it, that's what modern monetary policy, modern monetary theory has taken us. Can we monetize the debt? Can we keep rates low and not? Well, to your point, I think you nailed it. So the point is, yes, we have to hike in order to cut. We have to put something forward so we can take it back. And I think that's the cycle we're in. And again, I don't want to look at it from this is what I think or this is what I feel as if my lower intestines are making my trading decisions. What does the data map out to? And if M2 printing falling, CPI will follow. Next July, we're already seeing a very slight probability for going back down to 3 to 3.25%, which would be coming off of 3.25 to 3.5 or 3.25 or 3.5 to 3.75. So it's starting to bake into the cake a little bit of a, I won't say accommodative monetary policy, but to your point, they're going to start to cut as soon as they're done. I mean, it could be as early as next summer, which is mind-boggling. So back to Bitcoin. Bitcoin has always been my bet against the FOMC chuckleheads, right? If that's what C in chucklehead, that's what C stands for in FOMC, for those of you that didn't know. So if the chuckleheads are going to continue, and I mean globally, if globally the chuckleheads are going to continue to be irresponsible, exactly. Every single G7, G8 central bank went into printing low rates, prolonged period of time, and they're all going to have to hike because they're all going to have to cut. So that's where Bitcoin will always be a staple, always be a staple. It's a play, has nothing to do with gold, not playing risk appetite, risk aversion. It's a bet against central banks.
And what about, if they just well, 2.5% inflation target? We're just joking. 3.5 is okay. 4, that just resets the whole continuum then, right? For the future course of interest rates.
The more that I think we look for reality in this economy, like I said, I'm not even joking when I say they're measuring the economy on Pluto. The idea that what they should do and what is real is what factors into their decision making. I think that's what hurts a lot of traders and investors. People say, well, Rog, how can they bring down inflation with just, 3.25 or 3.4, I believe is what the Fed fund futures are factoring. How can that even put a dent in inflation? It doesn't actually matter. It's whatever they say they're going to do. They get to have this reality distortion field. That's what they've always had. And as long as that's the reality that they're going to believe, then that's the reality that we are going to have to trade. So I guess that's my approach, not what they should do, not what they could do, what are they doing, and what is their picture of the economy.
So what's your favorite book back there? Are those market books? Are those fiction, nonfiction?
I read about 3 to 5 books a week. It's how I decompress. I'll even read between trades. I call it a productive distraction. I've been getting back into this one. This one's called The One Thing. I've been getting back into that because I think traders tend to have a buckshot mentality. We tend to try to do a lot at once. And I find that when I start to focus, I do a whole lot better. So I'm getting back into The One Thing. That one's a great one. But yeah, I love to read. It just keeps me from over trading.
Okay. All right.
All right, let's go ahead. We'll wrap on up. Thank you for coming on, Raghee Horner. I appreciate you like always and love the insight today. Keeping it optimism is definitely going to keep you probably into the money in the long run. We all know the long-term trend of the markets, and it doesn't point to the downside. So appreciate you coming on.
Appreciate you three. Thank you so
Thanks,
much.
Raghee.
I'll see y'all soon.
Realism too. I mean, optimism, realism, looking at the markets. All
I'll
right.
give you realism. Realism is Shopify. Bring it up.
They go green.
Oh, yep. That's impressive. No, so we're talking about right before Raghee started, and that support was still somewhat holding. And this is the kind of market today that they're buying stocks on bad earnings. So impressive. Just rallied basically 8-9% in the Raghee Horner interview. So obviously they must have said something on this conference call. But you can see the turnaround here, and they're finding reasons. It's a silver lining market right now, and they're finding reasons to buy stocks even on disappointing reports. They're just looking for a reason. So it's caution right now to all the bears out there. Could be a bull trap. You know, we don't know where we're going. I still think fading moves overall is still prudent here, but man, that Shopify just held those lows again.
Someone made a stand at 29. I mean, they were there. They're like,
They made some money, Joel.
Hit me. I know.
That 29 guy who kept buying, or girl who kept
Yeah.
buying there, or machine is now up almost 10% on their purchases.
They heard my bear.
Wow.
They heard my bearish rant, and they're like, "Let's go 29.50 bid for the float. Let's go 30 bid for the float." And you know what? Also, people that were short the thing. I mean, what better kind? 2 days in a row, you get bad news on it. So even if it's not new longs coming into the market, this thing traded over $40 last week. You're getting it all in the 20 handle. I mean, what more after? Drop from what 175? I don't know which 176.29 is the all-time high, and the spoos are coming right back up to the highs of the session. We're up 37 handles. There is a relentless bid in there. Pre-market high 68.50. The only I'll give you Monday's close was 39.70, but it just could be one of those days, man. You just take out that pre-market high and boom. You're gone. Take a look at 4,000, and then you got Jerry later on. So
I'll tell you what it could be
do.
in Shopify here. Just to kind of mention, it'll throw into our next topic here. Kathy Woods buying the dip on Shopify, adding 1.76 million to her ETFs. So who knows? Maybe Kathy got the buying program on
Maybe
today.
she was the one that was sitting down there at 29. You think Kathy was that buyer?
That's what I think, Dennis. That's what I think.
Up. Kathy's big, man.
Longer term support. She saw a break through that 30.
Don't let it go through 29. I'm a nonstop bid at 29.
You're talking about for tomorrow, but she was buying yesterday.
Well, that we know she bought yesterday.
Yeah.
But he's saying right now
she's
that
adding
that
more.
29 buyer was Kathy Wood. That could bid.
I mean,
I don't know
cutting
if
through that
pre-market.
30 support, she probably placed a nice bid there. I wasn't watching the price action, so I don't know if there was some big, and we won't know probably till after. But also, Kathy didn't only stop. Maybe she used one of her losers selling off. Kathy Wood dumped some Coinbase. So
Not
who knows?
Some.
Well,
a lot.
Yeah, 75 million worth.
What about
she's realizing that loss on Coinbase, which I was realizing. Remember, I talked about it last week at 70 when I had the little rally, and I was like,
You're a smart man, Dennis. You're a smart man for getting the hell out.
Well, I'm not as smart because I got killed on this thing. I'm lucky it was a half-size position, which quickly became a quarter size and down to a minuscule position. But using the last rally to get out, I mean, was prudent. And obviously, Kathy was just done. And I mean, okay, you got the SEC investigation now. You've got a lot of stuff going on here with Coinbase. So I think there's just better places for your money, and I'm cautious on that one going forward.
Hey, Craig,
I think Kathy's being smart to cut that loser, to be honest.
Craig threw us a tip here. Didn't want to go $5 resistance, but went $4.99. Thank you.
Oh, nice.
Snap. What do you think? I mean, Sean talked about it the other day. Holding the low of the move. It's double bottom. I mean, you're out. I mean, I'd give it a little bit more than 963 here, but
I like your thinking. It's right now. We are in this day, not even thinking about anything else. It's just think about what has happened today. Buy the dip is like everywhere today. Everywhere. It's like FOMO buy the dip. I like your way of thinking. If there was ever going to be a turnaround in Snap, it's going to be today. So, and I'm not saying it's been the 3-day rule, Karen Feinerman's 3-day rule, so don't touch the stock after. It's a good rule. I know Grasso says the same rule too. It's a good rule to follow by. You get the dip, wait a couple days for it to shake out, and then, maybe you start, to nibble in to something. I'm not a fan of Snapchat whatsoever, the company. I like your thinking, though. There might be a trade here.
Yeah, my biggest thing with Snap is just I would play it maybe in the intraday for the rise, but remember that Meta reports after the close.
Oh yeah.
So don't forget about that.
Trade.
Don't forget about that one. You know what I mean?
Pure day trade, picking it up under 10 here, stopping out at the low of the moves. Stop out of yesterday's low at 963,
100%.
risking yourself 25 cents to say, hey, is there going to be some institutional money looking for other dips? Because Snap has dipped pretty hard here, and maybe you could get back to like 10.5 or something. So I'm not saying it's going back to 12 or 13, but could it get up to 10.5 today on a buy the dip day? Maybe. It depends on if we don't have the rug pull too, which, there's always a potential for a rug pull as well. But right now, I cannot believe the strength in a lot of these companies that reported very disappointing earnings.
Yeah.
It makes me, yesterday I was nervous, very nervous off the Walmart stuff.
Yeah.
I was nervous enough to actually hedge some of it. I almost feel like lifting my hedges after seeing this pricing action.
We got one more headline to hit. I want to make sure we get to it. Let's talk PayPal. Activists here, Elliott Management, building a stake in the payment company. The size of the stake wasn't immediately known, according to Wall Street Journal report. And you guys are seeing PayPal up now. I'll throw it to let's take a look.
I'll just
Dennis,
make
long term. What do you think now?
I'm just gonna make 2 comments here. Western Digital is going to 100.
Okay. That was Elliott.
Yep.
That's what he said.
And then, you break it up. I don't know how these guys know so much more than the company. And pin interest.
I love it when you say pin interest too.
guess where he revealed his stake last time? Or guess where that news came out?
When was that?
Oh, I'll just put the red arrow there. Boom, right there. That's when that
I'm
news
looking at
came
4
out.
charts. I just don't see a red
Upper
arrow.
right chart,
It's
red
the
arrow.
smallest red arrow I ever saw. Look at that little red arrow. You
yes.
can't even tell. Bigger red arrows, Joel. Some of us have glasses on here. I can't even see that red arrow. I still don't see it. There it is. He's got to point it out. Get that big red arrow. Big red arrow. Boom.
I can't. I don't know. Can I change the format?
Maybe a circle.
Maybe a circle.
Oh man,
maybe a circle.
Square. Come on, man! I just learned how to put the
three
arrow
little
in
red
there.
arrows.
I put the arrows in there. Now you're complaining about the size of the arrows. I mean,
Dennis, you don't like technicals. Come on.
Yeah. Oh my gosh. But
that's a technical chart.
Anyway, Triple G, we're up against the clock here. Do you want to make that announcement for our listeners?
Let's do it. Go ahead, guys.
Yeah. So we're doing another event here. We're going to do an educational event on, and I should have it in front of me, but August 18th, 12 to 3 o'clock, PreMarketPrep.com. You can sign up there. We can put the link in the chat as well. It's an introduction to swing trading. So it's going to be me, Joel, and Rob Friesen. And we dug somebody up, and everybody's been asking, what has he been up to? What has he been up to? So we dug him up, and he's decided to host our event there. Mr. Spencer Israel will be hosting our swing trading event there on August the 18th. So if you're interested, I'll put the link in the chat. You can tweet at me. I can send you the link as well. But we're doing another educational event. We haven't done one for about 6 months, so we want to do another one here. Same, obviously, Rob, my mentor, Joel, who has been my mentor for years as well, and myself, and then Spencer Israel will be trying to keep us all in line.
Yeah, and for all you guys, our special friends out here, PMP10, and also this one's gonna be a little different because
I think it's PMPP10.
Okay,
I put an extra P in there. I don't know why. I might have to fix that.
Just the other thing that is going to be interesting about it is, you all wonder what Triple D does in the middle of the day. Well, you're gonna get a little sneak preview of some besides the educational material. joining Triple D Interday. So I'm looking forward to it. That's August 18th. I got to hop over to
Is that a
PreMarket Prep.
Thursday? I think it's a Thursday.
Yeah, I
Looking at the
believe
calendar.
so. Yep.
August 18th, Thursday, middle of the day, 12 to 3. Yeah, so join us there. Links in the chat.
Okay, I got to hop. Triple D, I'll check in with you later.
All right, getting Joel on out of here. And Dennis, let's see what happens today. Did we get to that 400 or not? I think it's in reach.
I think this is going to be a very interesting day. I think, to your point, if they do pull the rug, that would be the most bearish sign you could possibly get. So you absolutely need to see this market hold these gains. You absolutely need to see Microsoft and Google stay green. Otherwise, it was just, and there was always the possibility for that bull trap. So you still got to say a little bit of guilty until proven innocent. I hate chasing moves. I hate buying the S&P up 36. But, when you see Shopify getting bought, and it's leaked it back now, too, a little bit. So they ripped it. Must have said something on the call. It's now turned back to the red here again. I still think caution is still to be. I don't want to go all in on this market. But some signs here are saying you can still nibble on dips.
All right, we'll keep watch. One thing that I'll be watching when the Fed report comes out is the asset sell-off. I think it's more important than even the interest rates. Too many people talk about the interest rates. Not too many people talk about the security sell-off that was supposed to be $30 billion in maturing Treasury securities. I'll get you on out of here, Dennis. And then what was supposed to happen beginning September 1st, you're supposed to have those caps raised to $60 billion and $35 billion for the mortgage-backed securities. I think it's very important to keep an eye on that. If for any reason you see an increase or maybe a decrease there, you could get a swing in the markets. That's something that isn't being watched, that could be coming, that's unexpected. So watch for that. We'll see what happens today. And let's go ahead. Let's get you guys on over to live trading action. We'll get you guys on over to Lord Ryan Zunaid. And we got a special guest interview after 11. We're going to be getting into it with Monkeypox Stock Saga. So come on over, guys. If you guys want to check a look at the Saga interview, that's going to be at 11:05 a.m. Eastern on the live trading stream, which is coming up just right up in about 2 minutes here. Let's go.